Are you afraid to risk your hard-earned money in binary options? Well, binary options Cashback.com give you an ability to invest your money without the risk of the initial deposit. How does it function? Would you like to invest in binary options but it scares you to think that you could lose your money? 1. Select any broker from our selected web banners. 2. Open an account and deposit the recommended amount. 3. Send us an email to webmaster@binaryoptionscashback.com with the following details: name, broker's name, deposited amount, and the desired method to receive your money back, i.e. PayPal, money brokers, or bank account. And within a short duration of 30 days, you will get the return of the deposit. This advertisement comes with no obligations. We don't require any minimum amount of trades, and you can withdraw your deposit whenever you want. On the other hand, you can open an account with any or all brokers listed and receive a consequent refund.
Hello class, this is Brian from FinancialTradingSchool.com and welcome to BO202, Introduction to Support and Resistance Levels. So basically this is the first segment of 3 videos or 3 lessons on price action. And basically price action, aka PA, is naked trading. I.e. there's no indicators to confuse you. You're not looking at MA crosses or RSI crosses or MACD or whatever you want to use. You're not using any of that stuff. You're just simply having an empty chart, nothing else. You have your favorite chart type. So for me it's going to be candlesticks, which I will elaborate on later on. And you're trading exactly what you see. So basically I've broken this down into 7 videos that will aid you with price action. 7 or 8 videos. So firstly, you have price action techniques. So this lesson, BO202, support and resistance levels. Then we have BO203, trend lines. BO204, determination of market type. So these are the 3 main segments of price action. And price action, as you should know, or if you don't know, is basically the foundation of trading. Basically every trader knows price action, or they know a bit of it and then they combine it with their other techniques or whatever indicators they're using, and they use everything all together. But then there are some traders who simply use price action, like me. This is where I am now. In the beginning I used indicators, I tried to find the holy grail and all that stuff, but basically now it's basically all price action techniques. So there are 3 segments, the 3 that I just outlined, and each segment, as you noticed in the beginning, is going to be broken down into several parts. So this video is part 1, introduction to support and resistance levels. Then we're going to have part 2, which is SR level bounces, and part 3, SR level breakouts. And in the future I may add on extra parts. I may have another 5, 6 parts, I don't know, but right now there's only 3 parts for this video. Then the next lesson, BO203, will have several parts there as well, and then BO204 will have a minimum of 2 to 3 parts. Then you have factors affecting how you use price action. So there are 5 factors, or 5 factors that I think are important. In the future there will be other factors, but I haven't thought of them yet. So there are candlestick formations. So these are already done. They are in the BO100 series. So currently I have BO107, 108, and 109. Those 3 videos are on specific candlestick formations, so that will aid you in how to use price action in the appropriate places. Then you have pattern formation, which will come after the segments, so that's the first video to come after the 3 segments, so that is BO205. Afterwards we'll have BO206 time frames, then BO207 expiry times, BO208 hedging strategies. And some of these videos will have their respective theory-based lessons in the GT series. So for example, pattern formations, I think I did a video in the GT 200 series, I think 202 or 203, somewhere in the early 200s, that has the theory background for some of these topics. So when I do the individual video, I will obviously refer you to the prerequisite before you watch the example video. So moving on to actual support resistance levels. Functions of support resistance level. So this is a recap from GT202 price action. These are basically invisible levels where price bounces off of. So price will bounce upwards off support levels, and such you will place a call, and then price will bounce downwards off of resistance levels so that you place puts. So that's how you trade them. That's pretty straightforward. Now, for drawing support resistance levels, which will be illustrated shortly on an actual graph, just to illustrate what I'm teaching in this video, I'm not doing any examples since this is just the introduction. All the examples will be saved for the part 2 and part 3 of this lesson. So there are several ways to draw support resistance levels. Firstly, you have the unconfirmed levels. So these are the absolute highs and absolute lows. So these don't have bounces, so they're not really confirmed. So you don't really know them. So they're just the high probability, I guess, at the top or the bottom. Then you have your confirmed levels. These are where bounces happen at 2 or more touches of the level. So let's say you have a high at a specific price and it happened twice. So that's a confirmed level, so that it's confirmed now, rather than before you don't have anything confirmed yet, as we'll show you on the charts. Then once you have your levels drawn, you should break it down into probability zones, such that you're only trading in the high probability zones and you don't bother with the low probability zones, aka the coin flip trades or the no man's land. Because why would you trade a 50-50 trade when you can trade, say, a 95% trade? Because it's going to be near the top, so you know it's most likely going to bounce down, assuming it's still going to range. Then you would trade it down. Why would you place it in the middle where it could go up or down? You want to place the odds in your favor, not in the broker's favor. And also, one last thing to note: once a support resistance level is broken, if price retraces back, the role of the level is reversed. So if you have a support, it breaks down through the support and then it comes back up. That support should be resistance from now on. But that depends on the price action. You have to watch it. Sometimes it just breaks out because of a news release, so that it breaks the support, but then it retraces back up and it still acts as support. So you need to watch out for that. And lastly, for chart types, before I move on to the actual chart, as I noted on the intro slide, you should use candlesticks. So candlesticks are by far the most popular chart type. You're welcome to use open high-low close or open low close or line charts or dot charts or whatever you want. Use whatever you're comfortable with, but for me, I will be using candlesticks in my examples. And I will be using freestockcharts.com to illustrate all of these examples in these price action lessons. And I suggest you make an account with them so that they save your chart settings, so that you don't have to change your the default to whatever you like using every time you log back in. That way it's nice, because if you close your browser and you come back in the next day or something, it's going to be different, obviously, if you don't have your cookie saved. So I suggest you make an account for that. And you should refer to GT110 on how to use free stock charts. So in that video, I go through the basic functions on how you use free stock charts, and I've had viewers thank me in the past because I've showed them things that they didn't know about before about the free charting. And this is quite nice, especially on how to display split screen charting. And that's nice. Not many people know that you can do that, but you can actually do that. You're not restricted to one chart screen like most free chart providers. You can actually view, say, 4 charts at the same time on free stock charts. And lastly, you should refer to BO103 for other recommended charting platforms if you do not like free stock charts. So I'm going to flip to free stock charts now to show you guys the basic outline of how the probability zones are drawn and what's a confirmed level, what's an unconfirmed level, etc., etc. So here is free stock charts on the 5-minute chart of the Euro USD on July the 12th, so this past Thursday. This is just to be quick. I just want to illustrate what is a confirmed level, what is an unconfirmed level, and that's basically it. Everything else will be covered in the examples in the next two parts. So part 2 and part 3, which will display support resistance bounces and breakouts, that will be where the examples are, and that will be where the more technical stuff comes into play. So what I want to show is an unconfirmed level. So unconfirmed level would be something like right here. So this is unconfirmed because it's one little low right there by itself. There's no other bounces. Initially, basically, when you're drawing these, the first one will always be unconfirmed, and then as bounces accumulate on that level, it becomes confirmed as you go along. So for example, if you're coming down here, right, so this is a downtrend, I guess, you're going down, and if you were to draw one here, at this point it's unconfirmed because it bounces up and then it comes back down, and then here it starts to bounce again, but it makes a new low. So then here you have another level down here. So this is unconfirmed, But then this level becomes confirmed as a support because price didn't really close below it except for this bar, but then it bounces up immediately afterwards. So this is your, I guess, your low probability confirm support level. So this you would eventually turn into, say, a green color so that you know it's support, and these are unconfirmed. So it doesn't become confirmed until later on over here because it bounces and then goes back up. So this becomes confirmed at this point, but you're not, if you notice, it never really comes back down that low anyways. But this is how the thought process of you have to get into. You draw unconfirmed initially, and then eventually they become confirmed levels, and then if price ever retraces back down to them, then you could trade them accordingly. So you would place, say, a call there at your unconfirmed level, and then eventually you might win because it closes at the hour, you would win it. And then if it breaks down, you place another call later on, so say this one, right? It gets near it, but you don't really do it. Here it goes back down again, and you place a new one, and then these are your two confirmed levels. So depending on how you trade it, you can trade your confirmed levels or your unconfirmed levels. That will be elaborated in the next part, in the bounces or the breakouts. So those are at the bottom. Then you have resistance levels at the top. So for example, going back up, we have a level right there, which is actually quite nice because so this is 05 and this is 25. So 20 minutes later, it bounces up to here. So this is your secondary, right? They're pretty close to each other. So you can have a low probability or medium probability here at the lower one, and then a high probability at the top. Then you also here you have a breakout, but it fails to close above really. So you have another unconfirmed level, but these are really confirmed now. So now you could place puts every time you see the price near here. So you place a put there, it goes down. It calls up to there, and then you place a put again to go down. Here it goes up, and you place a put again, and then goes down. And then on the flip side, it doesn't really reach your support levels. So you might have to redraw levels such that you have, say, a level at this point, at that peak there, or that trough there, and then it bounces there, right? So I mean, how you draw this is up to you, but everything starts off as unconfirmed and eventually becomes confirmed. And once it is confirmed, once you have one confirmed levels, you're most likely to have different confirmed levels. Once you have several confirmed levels, then you break it down into probability zones. So you have basically your zero is in the middle. So this area right here, no man's land, is 0. And then as you go outwards towards the edge, it goes towards 100%. Or not really 100% because nothing is certain in this market, but it goes towards a very high percentage. So say 90-95%. So up here would be like 95% chance that it's going to go back down. So that if you place puts here, your chances are it's going to go back down. Here you have your 100% out here, and say this is 70% or 80%. So you would put less money on the low percentage and more money on the high percentage, for example. And that would be how you trade your confirmed and unconfirmed levels. But this is just the first part of this segment. You should watch the next 2 parts to fully understand how you trade these support and resistance levels. So going back to the PowerPoint, we have one more slide before we end. So time frames, this will be elaborated further in BO 206 and 207. And so depending on your broker, you might have different trade expiries, and thus this will affect what time frames you use. So previously on my free stock charts, I used the 5-minute chart to illustrate these support resistance levels. Basically, the general rule of thumb is that you should use charts that are 1 or 2 time frames lower than your trade expiry. So the reasoning is because if you trade 1 time frame lower, you're able to see your expiry and the current price, so that you know how much room you have to move between where you are now and where you want to expire. And then 2 time frames lower enables you to make precise trade entries so that you know exactly where you are. So you want to get the wick of some support resistance level or something like that. So for example, if you're trading 30-minute expiries, you would use the 5-minute and 15-minute level charts to draw your levels, and then you would color code them accordingly. So you draw, say, your 15-minute as red or pink or something, red and pink, and then I guess green would be lime green and dark green or whatever colors you want, so that you know that the higher time frames are stronger than the lower time frames. So that concludes this part of the segment. So as usual, my recommended brokers are 24 Option, Bank the Binary, and Trade Rush. And also make sure you use my links to sign up so that you can get an hour of tutoring with me. And I updated the link. It's still on my financial training school website, but I have a shorter link now, ftstutor.com, so you can just type that in rather than going to my main site. You can just type that in, go straight to the tutoring page, and all the details are found there. So I hope you guys enjoyed this video, and I will see you guys next time.